Let's start our coverage with the Credit Suisse takeover, the first acquisition of a global, systemically important bank since 2008, the global banking crisis. Over the weekend, despite soothing words and a 50 billion Swiss franc line of credit from the Swiss Central Bank, it was clear it was not enough to save the bank.
On Friday, the liquidity outflows and market volatility showed that it was no longer possible to restore the necessary confidence and that a swift and stabilizing solution was absolutely necessary. This solution is the takeover of Credit Suisse by UBS.
The threat of a global banking meltdown became real in the minds of regulators and of politicians.
The bankruptcy of a global systematically important bank would have caused irreparable economic turmoil in Switzerland and throughout the world. For this reason, Switzerland had to take the responsibilities beyond its own borders.
So Switzerland's other banking giant, UBS, created in the 1850s, like Credit Suisse, stepped in.
Having been Chief Financial Officer during the last global financial crisis, I'm well aware of the importance of a solid balance sheet, especially in challenging times like these, and UBS will remain rock solid.
But there are consequences. The National Bank of Switzerland will give UBS an extra $100 billion of liquidity.
The Federal Council is therefore confident that in this difficult situation, the takeover of Credit Suisse by UBS is the best solution for restoring the confidence that has been lacking in financial markets recently and for best managing the risk to our country and its citizens.
In Australia, the Reserve Bank was watching and also being briefed by overseas counterparts.
Well, we weren't involved in the swap arrangements that have been announced because we don't need to be involved in those. But yes, I am and have been kept informed of these developments over the course of the weekend by my counterparts offshore.
But above all, giving a message about Australia's banks.
Australian banks are unquestionably strong.